I told you not to sell.
We are live, ladies and gentlemen. As you well know, if you have been following this channel, especially when it comes to GME specifically, I have bought in at around $20. I did sell recently because it failed to break out above our 22.50 level. And on top of that, if we look at the contracts here that were bought in, a lot of puts were bought in. When GME was trading at 22.41, the put option with $21 of strike price expiring on October 11th, there was a lot of put options. So if this stock, if a lot of people really do believe this is going to come down, which I believe so as well, this is the trading range we are in. We are in a trading range between 19 and 22.50. Very important that we break above 22.50 so we can go to 25 and then maybe potentially 30 would be next up here. This is what I'm looking at. I'm looking at the charts and I'm seeing a stock that is just trading between a range. Let's abuse the trading range. Let's take advantage of that bottom down there and let's get in nice and cheap every single time it gives us that opportunity, since it has been doing this since the end of that huge run up to $60, pulled back as low as 20, and it has been trading within this range since. That's why you never want to chase when it runs. You want it when no one wants it, which is at $20 clearly. They want it when it's at 40 and they push it up to 60. Or you get what I'm saying. That's ridiculous. We like cheap on this channel. So I already sold off and I'm going to wait for 20. Let's see what happens with those put options. That's going to be interesting. Monday's going to be interesting. But looks like the market as a whole wants to pull back anyways, especially when you look at Nvidia and you're like, okay, if we're inside this wedge, we're getting some red days here at the top of the wedge. We would expect it to come down, right? Like we would expect sell-off here. You look at SPY, same thing, of course. You're getting some selling stepping in. So if this continues going into next week, then we would expect GME to pull back. We expect it to pull back. If it breaks below 21.71, which is where it's been holding, it almost looks like a bull flag. It does. For me, it almost looks like a bull flag here. But if the market's going to bring everything down, then I would expect GME to show the same weakness at that point. Barring some kind of, let's see, what's the volume? What was the volume? 7.42. Yeah, the volume was greatest the day before the huge sideways action here. Because we're just trading sideways here in this range. It's got to go one way or the other. But every time it's come up here, it's come down. So I would expect it to continue to come down. And those put options will be exercised, I'm sure, at some point. But a lot of people betting it's going to come down. So, hey, wait for 20. It'll always come back down for 20. The stock, the company itself, it's not that great. But the stock, if it's going to give you these opportunities at the bottom, and you guys know I love big bottoms. If you love big bottoms, hit that like and subscribe button because this is what we're about. Big bottoms. Wait for 20 and under. I'm going to buy back in. I already flipped it here because what choice do I have? I'm not going to hold it only for it to come back down to 20 like it has been doing since that $60 move. So take your profit. We'll jump back in, rinse and repeat. That's it for the video, guys. Don't forget to hit the like and subscribe button. I will see you in the next one.